All right, what's up with my people? Today we're gonna be going over fair value gaps, just to give y'all a better understanding of how I trade or how to trade. This is for new traders, experienced traders. I'm using this as a journal, and I'm hoping that anybody else that come across this, that you can take it, learn, and be able to run with it. Okay, so as you can tell right now, we are on GPB USD, which is the British pound and US dollar. It's already marked up with support and resistance lines. We're not about to go over support and resistance lines right now. We're about to go over fair value gaps. So if you can see these boxes, these are fair value gaps. What are fair value gaps? Fair value gaps are gaps in the market that needs to be filled. What does that mean? And why does they need to be filled? Now, fair value gaps show an imbalance in the market where you will see pressure, whether it's buying pressure or selling pressure, just like a support and resistance line. When you see support and resistance areas, sometimes it makes a gap in the market. Now, how the gap appears could be different, whether if it's going bullish or if it's going bearish. So as you can see, this is the beginning of today's February 8th, Thursday, February 8th. This is the 8 a.m. candle. Right now we are on 9:45 candle. These are 5-minute charts. So this candle will close at 9:50. Okay, and then the next candle will appear. Each one of these candles is 5 minutes. Okay, so what I like to do when I trade, I like to start from the previous day's high and the previous day's low. Okay, as you can see, the trade yesterday was successful. Now I can break down this trade. I'll do that later on. But we're gonna see if we can find something setting up here. But we're gonna go through fair value gaps, right? So a fair value gap, once again, it shows an imbalance in the market. It is a gap in the market that needs to be filled. Now, how do you find fair value gaps? Now, you have to have 3 consecutive candles. So once you have 3 consecutive candles, it's going to be a wick on one side and the other side of the middle candle. Now, you want to pick a candle that has a lot of momentum or just a push in it. And once you see that, you want to see where the wicks line up, and then that will create a gap in the market. Now, with that gap in the market, like I said, it shows an imbalance, and it is a gap that needs to be refilled. So the market always moves back into these positions. Now you can wait and then place a trade to take it back up into those gaps, or you can go with the market, with the trend, and watch the gaps occur, and you can follow the trend down or follow the trend up. So as you can see right here, we have a long push in the market. Now, no, we do not have 3 consecutive candles, but with this push, it created a gap. With this wick, let me zoom in so y'all can see clearly. With this wick on this candle and this candle, I like using a push. As you can see on this one, we have a push right here too, and we have a wick on this side, a wick right here too. You can use this wick or this one, either or, and this wick right here. That which creates the gap. So once you see these, then that means that that gap is valid. Now, if you see something like this, let me see, like this is a small push. So like right here, okay, we can go right here. This is a gap in the market. You see this push? This push? That's why we got this wick and this wick. We put one right here. I could have even extended it all the way down to here if I wanted to with this one. Now, this wouldn't be one because look at this wick. It aligns with this one. So this is not a gap in the market, but this is. Now, depending on the gap in the market, like you see this right here, this shows selling pressure. So if I was receiving myself back into this gap, like just like we was earlier today at 9:35, 9:30 we touched inside. 935, 940. You wouldn't be wrong for pricing a trade for this to come back down. Why? Because the fair value gap sits in a lot of selling pressure. Same thing here. Selling pressure, selling pressure. Now, this is where we will get into support and resistance lines. We'll get into pressure in the market, and we'll find a position where the market may retrace itself, and then it may pull back. Find entry points. It can be whatever. Now, fair value gaps is used to find the imbalance. It's used because we know it's going to retrace back into it, but it also helps us find entry points. So once we start breaking through fair value gaps, we'll start seeing a change of a trend, similar to what we're seeing right now. It looks like it's starting to form an uptrend, right? Now we are on a 5-minute candle, so we can go to a higher time frame and see what's actually happening. Smaller time frames is what we use to find entry points. So I know we are inside the consolidating area because we're back at a position where the market has fallen in. So if I align myself with what the market is right now and follow it, even if I don't, you can see this red line, this red dotted line. It'll let you know where the market at. Now, when you see that line go across, just look in the past and see what happened before, right? And then you can see entry points. You can see pressure. You can see the change in the market and in those positions, that area of the market when it rises or falls back into that area, right? But when it does that, what it happens is it creates a gap. Now, you see we have a gap there, right? Because we have this market, this wick does not overline with this wick, so there go a gap. Now this gap has been filled. Now what happens when a gap is filled? It will soon become either support or resistance, or the market may break back through it. So anything can happen. But by knowing where the gap is at, it makes it more stern. But now that it's broke through, it becomes less valid. So now you will look for other positions that'll make a gap outside of that. Because then once you can see how the market reacts to those gaps, then you will be able to make a trade or find an entry point. Now, I'm going to show you here because we have a trade already preset. As you can tell here, we have a gap in the market from the bottom of here to here. Now, I knew it was selling pressure up here. How did I know that? I'll break that down another time. So my idea was to bring the trade back into here. Now I have these gold lines because these are take profits. That's a totally different story when it comes to support and resistance. You can see where pressure of the market is kind of sturdy. Now, mind you, I took the trade out around here, so but it played out all the way to here. So I didn't hold the trade all the way to here, just so y'all know. But you can see the gap in the market happen when the market fell. You see this green wick on the second side, right? No wick here, but it's here. And here, I could have used this one. I used it here. I feel like the pressure pushed back up there and went down. So I knew all this was pressure. I knew up here was pressure. So I knew it was going to balance its way out and have a breakout. Now, this could have been a 50-50 guess. It could have been. But just from my experience, I feel like it was better for me to go for the sale here. And the reason I said it is because the push here from this wick to here is not that strong to make a gap. From this green to this green, it's not strong. That's not strong. So that'll say that this gap has already been tapped into. So once we broke out of here and came up to here, there's no more gaps holding this. There is no pressure that's going to push us up, and it was all pressure pushing down. So my goal was to aim back down from how far did we go from this prior point before? And that was down here. Now the market is succeeded down here because I wanted to aim here because of this low, but you can't always guess it. So like I said, the fair value gaps helps us find the imbalance in the market. So this is an imbalance in the market. All in this area is imbalance. You never know what's going on. Look, we got pressure pushing up, pressure down here, pushing up, holding down. It's still falling below. It's just a lot going on in this area. The imbalance, right? Now, we use that to help us find when we start looking at entries, we start looking at changing the pattern, the break of structure, anything. So even right here, right? So we went through this fair value gap. We went through, we getting close to this one, right? But look how much pressure is right here. So selling pressure. So look at the market. It's showing us selling pressure. So now we have to wait and see what'll happen, right? I want to make a trade here to come down here. That's too risky. I would rather take a trade here to go up, but I wouldn't make a trade to go up right now because I don't know what the market want to do. But now I know we in the middle with two gaps. Now I have an idea of what could happen. It could come up here. It could come back down here. And then when it get into here or get like right here, see how it reacts to this area or reacts to this area. If it supports this and rise back up, then I'm going to use this as a support and rise it back up. If it's not breaking through, here and coming back down and starting to look like it's going to break through here, next time it come up here, I'm going to break it back down through here. See, you have to watch. Now, it may, like I said, break through here and then come down. It may break through and come back down, but that's the whole point of stop losses. That's the whole point of the stop loss, to stop you from being able to blow your account like that, right? So let's go back over everything we just went over, right? Just fair value gaps. What are fair value gaps? Fair value gaps are gaps in the market that needs to be filled. It shows an imbalance in the market, rather it's buying or selling pressure, okay? How do you spot a fair value gap? You would need 3 consecutive candles. Do it have to be 3 consecutive candles? No, but you have to have a candle that shows momentum, that shows push, whether to the upside or the downside. Now, once you see that, you look on both sides of the candle. So you have to let the candle after that be printed and find the gap in the market between the wicks, pressure, wick. I like using the whole body sometimes. If it makes it easier, you can just use the whole body of the second candle. That's how I started out to make it easier for me. But then I had a fuller zone, more safety. So if you want to do that, you can, but it's the wick of the candles before and after that shows the pressure. Before and after. Before and after. Do we have one on the buy side? Nope. And this makes it not valid. You see how like this wick coincides with this? Now we could have used this gap right here. It's a small gap, but it's still a gap because this wick is not overlapped with this one. So this could be a small gap in the market. But what I learned is when we on a smaller time frame, the smaller the gap, the weaker it is. So if you see it just broke through this gap like nothing, look what it did to this one. It just shot right through and it made the gap in. So coming back through here, what I expect to happen? It to shoot right through there. Guarantee I predicted to shoot right through here. That'd be my guess. Because it's a small gap, but that's how you find gaps. Even though that's a small gap, that's still a gap in the market. It's still a gap in the market that needs to be filled. So now this one is filled, like I said, it becomes more invalid. On what side? The sell side, we were just below it. So now it's invalid on the sell side because now we're above it. So now we have to see how does the market react to this gap above it, because it can either bounce off. You see? Either bounce off. You see how it closed before, and then before it shot up, it can most definitely do that, or it can support and just go up. It can break through as well. But we have to watch the market to see what happens. So when the market get back into this area, now these are previous gold lines. So you can see the market still like supporting these lines. These one put on here today. The only thing that was added was these fair value gaps that was previously made last night. That's the only thing I added so far. Now I'm going to delete these because I don't need them. Not right now. If I want to start finding my entry point, support and resistance lines, I show that. So I don't need these right now. It's all just a gap. Now I can see pressure in the market, but we're not talking about that right now. We're talking about fair value gaps and how to find them. So go over it one more time. What is a fair value gap? A fair value gap is a gap in the market that needs to be filled, and it shows an imbalance in the market. Imbalance in the market, rather sell or buy. It shows you the imbalance in the market. Okay. How do you find a fair value gap? You need 3 consecutive candles, and you need a push. So you can see this. It's made another gap. And truly, this would be like right here. So we're gonna see how it reacts off this area. So now we have support twice right here. Let's see how this works. Now this is a larger fair value gap that we are actually in, which is crazy. So we are in a higher time. So this gray down here, you see how wide it is? That's because that's a higher time frame fair value gap. So I like to mark out the gap. So I know on a higher time frame, we're sitting on top of this. So obviously it's showing me it want to break in, but this could be a wick on a higher time frame, and this want to bounce up. So now we sitting above this right here. It probably want to just work its way right back up. And what we have to do, we have to wait and see, analyze the market, see what price action want to do. Which is, what is price action? Price action is just the market itself, watching the market, knowing what the market has done, going up and down, up and down, down, up, down, up. That's just price action. That's all that is. But marking the chart up with fair value gaps, support and resistance lines, they actually make it easier for us to be able to make trades, and then finding entry points, because I make my entry points inside the fair value gaps. Now that's a totally different story. So if I see the market not, so you see how this was sitting there, like I said, this is showing all sell, right? And I said you wouldn't have been wrong, because when this was rejecting it, to say when it came up here it was going to go back down. You wouldn't have been wrong. That would have been a good idea. One, we got a downtrend going. Nothing. We got lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So it coming back up to here, I would have just like predicted it to do the same thing. But you never know. You have to watch. So if you would have did that and had your stop loss above here, you would have been stopped out. Like guaranteed, you would have been stopped out. But like you have to watch. You have to watch. You have to watch. And how do you find them? 3 consecutive candles, the wick before and after the push. You can use the full body of that candle if you wanted to. The push candle, you can use the full body if you wanted to. But it's just the wicks. What does that do? Show you the imbalance in the market, or it shows you, I mean, an entry point. It shows you, it just shows you pressure. And I don't see it set up right now, but so far what it's looking like, it's starting to like bounce off this one. Now, why is that a fair value gap? Like I said, we got 3 consecutive candles. Look at the wick. It's not overlapping with these. And they starting, and this is the one after and before. The wick before and after makes the gap. Now, with that being said, now we have what? A fair value gap. And depending on what the market does in this gap, will let us know where we can move, or where the market wants to move. So obviously we're seeing it break through this one. It's starting to come back to retest this gap. It could be the same as this when the second time, the third time it shots out. So we see heavy pressure pushing down. So it hasn't touched this area yet. So around this area right here, it's seeming like it's a lot of pressure. And that's coming from previously right here. You see it? Look where I put it in now. I'm gonna change this black. Look at that. From previous, this pressure to start pushing down from last night. And this was at what? No, this morning. It's 6:45 this morning. So coming back into this area is pressing down again. So now we working our way into this gap. So now we know we're not trying to pass this area, this pressure area. This is where the market failed. The market fell down here, built itself back up, and couldn't surpass it. And look, it's still not surpassing. So we have to see what the market wants to do from here. Keep going, because it's looking like it don't want to break inside this area either. Oh, there you go. Now, could have this been an entry point? Yeah, most definitely. But I mean, I wasn't looking for that, nor was we teaching pressure points in the market. I call them pressure points because I like to trade off of where the pressure of the market pushes either up or down that, and watch how I react, because everything that we do is repetition. Everything is done in the market is repetition. The market is only going to repeat itself. So I won't be surprised if the market took it from here back to just here. Let me delete this off. I don't know why that line there, but that shows buying power right there. But it can just come down here and then shoot back up. It only can fill that gap and then start working its way back up to fill those gaps. Guaranteed. It could be working its way back down because it want to fill this fuller gap down here. And I want to say that's off the 4 hour. Let's see if we can make another gap in the market. No, we're making structure right here. But what type of structure are we making? It's showing the support. It's supporting up, but it's resistance towards going down. That's all it's showing. And you can see that the market wicks are getting smaller, so it's showing more pressure to push up. But the market could fake us out. It could be showing us that like that before it just shoots down. Because the market shot up here and fell right back down. So it's not closing above here. So all this work coming up and just this is nothing. This is like where the market rose back up to, boom, boom, and fell back down. So now this candle was kind of going to show us like, where's the market really at? And then people are going to start putting money in, and it's going to start deciding where it's going to go. And it's going to start consolidating and retracing itself. It's going to work its way where it want to go. It's like news about to come in, money about to get pushed into the market. But I appreciate anybody that come across this. I hope I'm making this as explicit as possible of how to understand any of this. I'm gonna put a description in the bottom to kind of break down everything I said. But I mean, it's as simple as that. Fair value gaps is like one of my favorite things. Once I learned about these, it took my trade to a whole nother level. Learning support and resistance and the fair value gaps, time of trading like that. There wasn't nothing else it's nothing else that I need. I can honestly say that. And they so easy to understand, you know. There's multiple markets, we know that. But they only move during a certain time. You have to know the time to trade your market. And you can look that up on Google, like what time is the best time to trade in a New York time, if I stay in Colorado and I want to trade in the morning, what's the best time to trade? They're going to tell you it's going to be the same thing. Everybody with the same answers. It's going to be the truth, I'm telling you. And then with fair value gaps, man, just finding like the gaps in the market where the market had trouble surpassing, or how easy it is to pass through, so it can let you know what direction the market want to go through. That broke it down crazy too, right? And it was so simple to, all right, so once I see 3 candles, one of them the middle one got to have a push. So the second one usually be the push in the market. And then I just look at the wicks on one side to the other, and then I make that the gap, stretch it across and watch how the market react to that area. That made it easier. And then it was like, oh, I got my entry points in here, because if it's not trying to surpass through here, obviously it's going to bounce off of here like a resistance line. But if a gap is near a resistance line or support or resistance, it's probably going to consolidate in that area because it's pressure pushing in both areas. So I got to see a breakout come. So then you start looking at other things. You start looking at candle patterns and things like that. And I'm telling you, like, it kind of opened your mind up. It makes it more simpler. Like, once you, like I said, I deleted my lines off from yesterday. So My chart is plain. I just say what I did beforehand so I can always go back. But my chart is very plain. Until I see a trade, my chart is very plain. So I'm seeing this one to work its way down here. And that's cool. I wouldn't put it sell in until I seen it break through here. Once it break through here, then come back up and retest, I'll make a sale. You see? And it's just that simple. Like, it's a patience game. If I don't see nothing, I don't see nothing. Sometimes I do be impatient, you know. That's how I blew the account. I blew gas. And I mean, when we had it at 100 something, so I got it back down to 80 because I was so thirsty to make another trade. I was excited for y'all. I wanted to try to flip it faster. I thought I seen something, you know. But it's a patience game. It really is. And fair value gaps are fun. If you see it's not touching them gaps, then obviously it wants to go down. But I mean, in this case, like say it did go down, right? Let's just throw a hypothetical, right? Let's just say it does go down, right? Where would I take this? I wouldn't take it no lower than like probably here. And the reason for that is that because yes, I seen the market come down here, but it also went down here and it shot back up with a lot of pressure right here. So I know it's pressure in the market here. But then where is the next place that the market shot up from? Here. So I know the market gonna want to come test this out because next to it is a wick. That's a gap in the market. That's a small gap, but that's where I think. If you can't see the gap, look. You see this wick? Look at this wick. That's small. That's a small gap, and there's buyer selling pressure next to it, so I know they're gonna break through that. So if I was to do a trade, let's just say the market's showing a lot of selling pressure, right? Which could be a fake out, which can be a wick about to form down here to show pressure to go back up. Most definitely can, but it's filling this gap up. That's one thing it is doing. So if I was to go down, right? Let's just say, where would I place the trade? I'm gonna place the trade. Let's say I place the trade right here. I would take it no lower than like right here. Put my stop loss. I probably would put it above this fair value got right here. Not this one. I'll do this one. Now we're back inside this one. You see what I'm saying? I will go back to just using that. But that's how I would set it up. So it'll be a 1 and 4. So that's not that bad. Like I set this up like this. If it was me and I was doing a trade, if it surpassed back through here and then retest. So for me to make this trade, let me draw this out so it wouldn't be like I would just take it. I would need this to come down, retest here, and then work its way down. I don't care how it's done. That's how I need it done. Let me darken this up so y'all can see. I would need to see this. I would need to see this come down. I don't care if it come down like this, but I need to see a retest up in here and then work its way down. That's what I would need to see. Me just saying. If for it to go up, it'll have to reject off this, come up, go down, and then go up. So once it it'll have to reject off this, come back down. It'll have to show me the rejection. I will make my trade off of this entry right here to take it back up. If it was to want to go up. To go down, I needed to come down, retest, then go down. That's how I use the gaps. I would catch the retest. So this right here would be an entry, and this right here would be the entry. Not the breakout above it. So if it broke out and just shot through, man, let that trade go. I don't know what it's gonna do. But if it break out and then retest, I'm in it. I'm in it. Because now I know we in the sell, or now I know we're in the buy. So this wouldn't have been a trade for me. This could have been a liquidity grab, to be honest. This is not a trade. Like, it looked good, but look at the bounce. This would have been a better decision to do. But look at this. That's not safe to me. So now we got the breakout, right? We got the breakout, but we got a lot of buying power down here. So I needed to retest here. If I put a sale in right here, it doesn't mean anything. I needed to come back up to here. That's what I would need to see. Now, this is how we use the fair value gap. And can you trade with just the fair value gaps? You can. You most definitely can. That's why I'm not putting no lines or anything on. But it's only a portion of trading. So in my best advice, I would say use this, and tomorrow we're gonna do support and resistance lines along with this, like how I use it. And y'all can see how we put them together. Now, I'm not saying every trade I make I win. No, I lose sometimes too. Obviously, if I blew the account. But I'm saying though, like, once you have this final information, then you can use it to the best of your ability. Because all this is an educated guess. That's all it is, an educated guess. And I mean, use it to your discretion. Like, use it as much as you want. As you can see, it got a lot of pressure on to push down. A lot of pressure on to push down. See, but now look, now it's working its way back into this area. So like I said, this would be my trade. I'm here, right above here, but I'm taking it down to here. Let's see, about there. The retest. So if you're making a sale, you want to make a sale on a green candle, not a red candle. And now I would have been inside this trade. So now we'll be in the trade. And y'all see I'm not moving it, no nothing. I'll get another drink. What? It don't look like they rocking with us, do it. It look like they want to go the opposite way. Ain't nothing wrong with that. Like I said, you don't win them all. That's just how I go. And no, I'm not trading live right now. I'm breaking down the fair value guess on how we trade. And we still gonna let this one play out on how we'll do it. The market loves to repull, and we are on 1 minute candle, so You know, the 1 minute candle was very, very volatile. That boy moves. When I say move, you will get lost. You will get lost. And as you can tell, on the 1 minute, we made a gap right here. We got a gap here. Got a large gap right there. From this wick to this wick, that's a gap. From this wick to this wick, that's a gap. So seeing that, what does that show me? That indicates what? Selling pressure. It's showing me that it's gaps in the market. Now, gaps in the market needs to be filled. Yes, that's 100%. That's a fact. I said that. But it's showing selling pressure. So by showing selling pressure, we would commit that it would continue to go down, right? Let it play. Like I said, I do want to appreciate anybody that find this, anybody that can use this information. This is for new, this is for experienced traders, this is for anybody that want to know. Like I said, I'm using this as a journal for myself to keep me motivated, keep me like in tune with my growth, my experience, my everything, you know. This is a new journey for me. I never thought about teaching anybody how to trade or anything like that. So this is really just me going over myself. I just trying to answer and give people the respect that they deserve when they ask me, well, why do I do this or how do I do that? And I could just tell you why I do what I do and how I do what I do. And this is one of them, which is using the gaps in the market. Do they always work? No, not by themselves. That's why support resistance lines come into play. As you can see, like we are building one right here. But like I said, we're on the 1 minute, so we can probably break right through there. We resisting this fair value gap right here on 1, 2, 3, 4 touches. So I don't see us going up. I don't. But do I see us going down? It ain't showed me any indication that it want to go down, but when it broke through right here. But when it broke through, look at the large push it had to go back up. So it could have a lot of buying pressure in this area. And I'm not surprised about that because obviously we just flew off a bar here. So the market does like to repeat itself, right? So it wouldn't be surprising for it to go up, right? Reason why I showed y'all both. So this one came rejected, right? Came up, and I was rejecting this area. Now, what would that indicate to me? Now, if it started working its way up to here and it rejects here, then this would turn into a buy. Let me take this off so we won't get confused, right? So that would have been a sell to go in, right? We got that. If this keeps rejecting down here off of 1, 2, 3, 4, 5 rejections and works its way up and rejects here, and it'll work its way back up. Guaranteed. The only bad part about this sale is because it's no longer below this gap. It's no longer below this gap. So it'll be showing more buys right now. You see a gap get forms here. Still a selling gap, but still. It lets me know that the market wants to sell, but when does it want to sell? No one knows. But what is it showing me now? That it wants to go up. Now the market is only repeating itself from here. If it goes up, that means it's repeating itself from here. Now we do go off the most recent. I do like using the most recent. So we got this high right here, which we rejected from, made this gap. And we can see this being a low. This, and this being a zone of, they just say retracement, stop loss, take profit. So everyone to make it easier to understand. But right now it's looking like what? This zone right here is going to be used for pressure to push up, not to go down. So like I said, if this one close below this and then shoots back up, it's an uptrend. Now the market is bouncing in this area, like below this top and this bottom. But it broke this low. We had an uptrend for a split second, downtrend in the morning. This can be selling pressure. This can be pressure. That long wick has been filled, refilled again. What would this market do up here? We got, let's see, change the structure here. So we see the sell. So we know this pressure here will make a change in structure towards the buy. And this right here is probably the setup for the buy. This gonna probably be the retracement to about here before it go up, which is probably gonna be like this. Now we inside this zone. So like I said, with the buys, it'll have to come up, retracing this area and go up. Now you could have made it right down here if you wanted to go off repetition down here for like a retrace, but it get kind of risky doing that. I ain't gonna lie, it get kind of risky. It gets kind of risky. Now this one can just go up and then soon just come right back down. I like to see what it does after this gap. So this is why I like the 5 minute. You see this is the zone and then rejected. So on the 1 minute, it looked like all these candles were just below this, didn't it? But on the 5 minute, you can obviously see the rejection. So seeing what it does in this gap will show me a lot. Would it close above? Would it close below? So we waiting on. And then that'll give us the indication. So I showed y'all what would be my entry point on going down and what it'll be going up. Now, how much your patience is on you, where would you use it is on you. You can follow me. And then I mean, if it was me, let me give y'all my honest opinion. If it was me looking at this, I would probably be banking on going down from here. I wouldn't want to put it in the middle like this. So now we kind of upper here. So this is more like a premium to sell, right? So we'll be in a good place to sell on a discount here, right? And what that means is like if you split where you at in half in the market, so half the market right now that'd be like right here, from where we opened up that to the top to the bottom would be about like right here. So it's like where to be the top point right here to be the bottom. What if, and if this is a sale coming from here, if I go up here, it's more risk. It's less expensive to sell from here to here, but it's more expensive to try to sell from here to here. You see what I'm saying? Or it's more expensive to try to buy from here to come back to here than to buy from down here to come up to here. So on a higher time frame, like you can see on the 5 minute, we've been going in the downtrend. We was just up here and we just worked our way down. This area right here, so support, we got fair value gap, we're honoring this support right here. So my guess would be, and then we got a engulfing red candle right here. So that's showing me a lot of selling pressure from here. So I could see it going up to about here, maybe here, and then selling back down. So I'll be looking for the sale. That'd be my goal. I'll be looking for the sale. I probably would have made the sale up here, from here, because of this. But I wasn't analyzing the market today. So me today, I probably would have been looking for sales. Yeah, and I want to say I said that already too, though. But yeah, I would have been looking for sales. So watching these buys and all that, that's all cool and dandy, all beautiful. But I would have been looking for the sales from here down. But that's just me. But I'm gonna go through this one more time before I log off. It'll be, what is a fair value gap? A fair value gap is a gap in the market that needs to be filled. It shows an imbalance in the market, whether it's from selling pressure or buying pressure. What can you use a fair value gap for? You can use the fair value gap to find the imbalance in the market. You can use it to find entry points and change the structure or break a structure, right? What is a breaker structure? A breaker structure is kind of just like what it did here. Went through the gap and it broke straight through. Closed above, it broke out. Same thing it's doing now, it's breaking out. It broke out here, but it closed inside. So it's not valid. This closing above it is going to be valid if it does. So we got 1 more minute until this candle closes down. And if it closes above, then it's valid. If we come back and retrace, then we have to take a buy. Not have to, but it's more logical to take a buy in my eyes. And, right? How do you find fair value, guys? You'll need 3 consecutive candles. The candle before and after will give you a wick. But the wick before and after, the gap between that is called the fair value gap. Hence, push, before, after, wick. We got push, wick before and after. Push, got filled, but another gap was made there too. So this gap became valid with this gap. Okay, so now y'all seeing that it closed above. Let's see what this does. This should be the retest to take it back up. And I said, like I said, I'll take a sell from here down. I'll repeat the market. That would have been my go-to. I would have seen if the market wanted to repel off that again. It may just want to come right here. But this engulfing candle right here shows nothing but sales above here. So this shows pressure in the market. As you see all the rejections. And that's about where that one closed. So to be honest, this might be about to come down. So y'all, why I moved it up there? I moved it up there because of here. This is where the pressure falls from the last body. The wicks, I like the wicks, but I like bodies. So if you can see, I put it right on top of that. I'm just trying to get it right on top of the body. I just expect the market to see, and look, if we come over here and look, this one goes right above it, on top of it, and this one went above, but coming back down. But once it break through here, then I will obviously see something. I hope that give y'all a better understanding of how I use lines. I mean, support and resistance lines. I mean, because I'm not going through them right now. I'm only going through the fair value guys, but I'm just wanting to be like, well, if I was telling y'all how would I trade, I'm telling y'all what I look at. I would look at the reaction off of here and here. So here, I want to see a retest and go above to come up to here. But I'm already seeing so many pressures sitting it back down here. So I know it's sales, but I see sales up here as well. So it's not passing through this gap. It passed through this gap, but it's not passing through this gap. So by not passing through this gap, it's showing me a sell as well. So this could be a sell. I still want to make a sell until I see a breakthrough here, retest and come back down. Same thing about doing a buy. There's no difference. I would need to see the retest. This, I would need to see the close outside of it, come back, retest, and close back outside of it for me to make a trade. Same thing with here. Come out, I can close above it. I need to see this one make a wick and come back out, and the next candle will be the one I'll put an entry in. So obviously you can see it doing it right now. It's coming back out of this gap. Let it come out this gap, close. The next candle will be the entry. If it closes inside the gap, I will not make a pick. I will wait and see how it reacts outside this gap. Yes. Pressure. But yeah, I hope that clear up a little bit of understanding on how to use the fair value gaps. It's all a patience game. It's all a patience game. So I showed y'all when I would have got in the trade when it on the 1 minute when it came down here and showed a retest. But I make my picks on the 5 minute, and this is why. Because with the 1 minute, like I said, it shows so much. It shows you these candles down here like they're important, and they're not. The 5 minute and above, that's all you need. The 15 is best. I just like using the 5 minutes to make entries. So you can see this all been rejected. It's still inside this gap. I bounce back and forth from it. So this one closed above on the 15 minute. It's still inside this gap. So what does that tell me? We haven't had a breakout check. So I can go to the 15 minute and wait till I get an actual breakout. You can see it's probably looking like it's about to break through. It's been playing around with this gap for a minute. You can see it broke through the upside, but it came right back in with an engulfing candle. So you don't know what engulfing candle means. That means, like, say you have a large candle that was printed just like this green one right here, right? So with this green one being printed and then this next candle being so much larger than it, it's called engulfing, meaning like it ate it up. It shows you like which market is more dominant in this area. And obviously it's looking like the sales, right? So like I said, I'll be going for sales. Either off of this area or right when it retests out when it closed below here. So not this week, 5 minutes. Not this week. I need a body to close below here. And it has to close below here, just like this one should have closed below here. If this one would have closed above, it would have been a buy. If this closed below, it's going to be what? A sale. So this one rising up as much as it did, then doing this, that's scary. That's scary. I'm not touching that. I'll let that ride. See, so much pressure right here. Now, this is why you look at multiple markets too, and you mark them up before the market opens, so you can watch them all transition, so you can find whichever one is the best setup for you. We stand on one market today, and that's solely just so we can get a clear understanding of fair value gaps. We're gonna mark out everyone that's made, and outside of marking out the ones that's made, I'm gonna show you how to go through and use just the fair value gaps to find a trade if you wanted to use just fair value gaps. Because it's all still a patience game. You see that rejection? Ain't no setup happening. I dragged this one across just so I could see how it lined up with this. Just because I don't need this. I was just doing that just to see. But I hope that explained a way to you guys. I'm gonna go ahead and sign off for this today. That's kind of really how it is for real. I mean, there's no other way to explain fair value gaps. Once you see 3 consecutive candles happen or a large push with a candle, you find them gaps with the wick before and after, and you will see the imbalance in the market, and you know it needs to be filled. So you know they're gonna go inside that market, but with that market, you can see the pressure too as well from either a buy or a sell. So you got to think. And the one that we're looking at right now, it's a buy and a sell in there. More sales right now, but still there's large buys and sales in there. And with that being said, that the market is kind of consolidating around this area. So we waiting on a breakout to happen with a retest. So that's what we need to happen. So as you can see, the candle, the path that we got, we needed to go either above or below, close below, retest, and then continue down, or close above, retest, and continue up. But Yeah. I want to say thank you to whoever find this. I appreciate y'all. And yeah, see y'all tomorrow.